G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So, welcome to another video. A little bit different format. I usually had the full screen, for the introduction, but I've slimmed it down. Just makes it more simple. Keeping on the corner of the right hand side. That's okay. You can still see my face. It's all good. So we'll start, and go this quick sort of video, sort of Bitcoin and where we're at, and where we sort of see things coming for the hopefully it's 2026, and yeah, if it's a good year or a bad year, and we'll just have a look at some things to indicate where we're heading for that. Hopefully it's not as bad as people say it is, because it's a lot of bearish sentiment out there on Twitter and on YouTube, and it's just really bearish at the moment. The bears are so loud, and the fear and greed index will just show you exactly what it's sort of feeling at the moment. So let's crack into it. So first up, fear is at 29. Okay, yesterday was 20. Okay, so big massive red warning sign there. Get the head back into the teens. We didn't get quite to the teens, but 20 is still bad. And then last week was 32, and then 24 last month. So we're still in this sort of red zone. If you want to call it red or orange, we want to call that. It should be darker red, really. But yeah, that's just the way it's coloured. And you can see the timeline here from December to now. So it's about a month, late December. And we're seeing we're sort of down this trough period. We haven't really seen anything meaningful. Got to 60 mid this month, and then just came back down again. So you can't really break by this neutral territory. We're still struggling around the extreme fear levels, as you can see on this timeline, and we're sort of starting to trying to shoot up here, forming a base, but this could take time, and we get some fake outs. It's just a sideways choppy action. You can see back from 3rd of October, basically being below in this sort of region, below 30, as you can see here. Okay, even though it's been poking above it, we're still, in this extreme fear to fear territory, which is not just the best feeling, but it shows what I've been talking about. Sentiment, Twitter and YouTube. It's not great. So this is accounting for all that. And if you see what measures, what makes up this index of fear and greed, okay, and you can see volatility is 25%. Okay. Market momentum, volume 25%, so half's already taken here. 15% social media, so Twitter, okay, as I mentioned, and surveys currently paused. All right, and Bitcoin dominance 10%, and trends, Google Trends data showing Bitcoin's search term makes up for this as well. So these are all things that make up this fear and greed index, and it's accounting for a lot of things. And yeah, it makes sense where we're at the moment. So onto the Instant Cryptoverse dashboard, and you can see here that's it's pretty grim. The summary risk is 0.17. So for everything combined is a reading below 0.2, which shows that so much opportunity here, so much scope to get to these higher levels when you get extreme euphoria. We haven't had that yet this cycle. Well, you can go back and sort of use the wheel and see if I'm wrong or not. And this goes back sort of this period here was really euphoric, okay, around the March period, and even then we didn't get to the high red levels even in early 2025. Still couldn't get there. So the summary risk, and the whole way through this cycle we haven't durably got what we did in November 2021, which is the last cycle, of course. That's where you want to sort of see it. It's up here in the red, and even maybe forward a little bit, or maybe back a little bit to November. So this is your sort of peak reading, and you even had a higher reading earlier that year. Okay, it was a lot higher. So you want to see these red readings, and you can see everything else, price metrics, on-chain, social, all above 0.8. And that's the time to be really cautious and get out of the market. And its risk is too high. You can see everything else on here, it's all red. And the 0.8, see it's really red. And you go back to here, and you just drag it, and then you can see where we are currently. Okay, it shows we're way down here, the opposite. We're actually in a low risk zone, and you can see the on-chain metrics is quite higher than everything else, but nevertheless summary is overrules everything. Social 0, and price metrics is 0.17. So yeah, not good, especially social metrics. Your Twitters and your YouTube. Okay, it's basically if you want to read this, see what makes up this indicator. And that's what it is. It's just a risk, okay, of retail, and it shows there's absolutely no risk at all, 0. It's been like this for ages. It's been, it's been down here since April basically, and then sort of ups and downs, and then we're sort of just flattening out now. We're really not going anywhere. So reminiscent to here, but this is a shorter period. We stayed down here at 0 in sort of November, December time frame, and sort of briefly peaked, sort of dropped here in August, and ever since then it's climbed up. We've been down here a very, very long time. So it shows that this cycle could be a bit slower, okay, a bit more extended than say these other cycles, which just got going pretty quickly. Then a year, December to December, 2017, January, roughly around there, 2018, and you can see 1 year, massive, parabola, when I say it, of social risk, okay, and same as this, so it really took off after you got going here in October, and then got to this secondary peak, which is higher in price but lower in social risk, 2021 there, November, compared to the May peak, okay, but this got going. Look, we were down here for a bit in December 2019, but it took a while to get going if you count it from the lower area, which makes sense. So it really took 2 years or so to get going. We're down here now. Can this take 2 years or 1 year? Can we really just shoot up now and just go absolutely bananas or not? This is going to be determination. I want to see this above 0.8 and to really say that we're frothy and this is over the cycle. This cycle so far, we got some sort of peak here. It's quite interesting. You got a higher risk. I don't know what happened here. There's false reading in the data. We've got this massive spike here. But yeah, it's 0.7, which is quite unusual at the bear market bottom. We get a big spike. I think there's something wrong with the data, to be honest. Besides that spike there, bear market lows. We've never had anything above. So these readings here at around, what's that, 0.43? It's at 0.43, okay, nothing above that. That's not even medium risk. It's nothing above that. So that to me signals that we're not even near the top yet, okay. We need to see these readings, which is extreme greed, when everyone's participating and the views are up, the risk's high, and yeah, clearly not seeing that at this stage. We're down at 0, so that's concerning. I want to be on price now, and we see we are retesting, and wicks right down to the 100-week moving average. Okay, as you can see across here, and this is the EMA, not SMA. So I did have the SMA on the previous video, but now I've updated the EMA. It's a bit more accurate, in my opinion. A bit more, it reacts to more price movements. It's a bit more fast moving. It's not as smoothed out as an SMA. So anyway, this one here, you can see on the 3-hour time frame, we've had no closes below this so far. On the weekly, which is what this moving average is based on, the weekly time frame, same thing. We closed, look at that, right on the bottom. We bounced off it. So good signs so far. We're not closing below this moving average, and we're actually just sort of broke through this rising channel, which is concerning, but we haven't broke this moving average. So there's a second line of defense here that you want to see broken. And it's price was going good, bouncing off the 50-week in the pink there throughout 2024, 2025, and then bam, we broke through it, and that was like everyone's calling the end of the cycle once this candle broke through in November. But I don't believe this until we break the 100-week, and I don't think it's over after that. But see the risk below here is quite low. We're at 20 on the risk, okay, and MACD has crossed bullish, but it has flattened out, which is quite unusual. So it was more pointing up, but now it's flattened out, so it's adjusted to recent price movement after this weekly close we got here, which adjusts the MACD. So we are quite low there, but it is what it is. What I do like to note I did mention this in the previous video, is when you draw a line, obviously price is high here compared to the lows in April in 2025, and the MACD, you can see it's going down. So it indicates to me, that we are facing a divergence, a hidden bullish divergence on the weekly time frame, which is quite powerful and should lead to more upside movement. And the same goes with the risk metric too. The risk metric is going down, which I like to see. It's very, very powerful, this risk metric. Seeing divergence here at the price, and then should see some upside from there. And I made a video where I explained the risk metric, all the divergences, and you can go back and watch that one. And it's pretty interesting. It's very, very interesting. It's very, very accurate. So watch that video. It's one of these, my last video before that. It's one of the videos, one of the recent ones I just did. And go back and watch that video, and you'll get an understanding of how powerful these divergences are on the risk metric. And it's very, very, very accurate. So I'm convinced that we should see a move up higher after this and not break below the 100 week. If we do break below, it'll be a week, or we'll come back to fill this area. But again, this week here sort of half filled this week. So you can, take it as you will, whatever you want to do. But I think it's sort of filled now. A lot of leverage has been wiped out. How much more to go? I don't know. At this stage, it's a lot of leverage playing. So there's nothing really durable. Spot volume, it's all leverage driven as far as I've seen. So that's what Bitcoin has done for us. And you can see it's looking pretty grim. Okay, it looks like we're in the gutter, but going nowhere. But we're trading sideways, pretty boring. But that's Bitcoin at the moment, and nothing interesting. Ethereum. Now, the moving average is pretty close together now, and we're below the 100 week, below the 50, below the 20, and we're sort of in its own area. We're below the rising channel, parallel channel. MACD hasn't crossed bullish yet, like Bitcoin has. And risk metrics is obviously the same for Bitcoin and risk metric, and pretty much nothingness. Pretty much nothingness. Okay, it's just sideways, boring chop. But at least it's not dropping in dramatic fashion. It's more or less accumulating. I think it's more accumulation, the distribution, but we haven't seen this durably break below, so it can still break and go lower. We don't know yet, but it's all about the economy and the outside macro factors that it really affects price the most. So that's Ethereum. Nothing really to say about it. There's no real divergences playing out on Ethereum. As far as I know, if I go to the 3-day time frame, I think the only divergence I can really see on this one is there's not really a lot of divergence. If you really want to count this, you can. So from here, this sort of low, this low here, to this low here. Obviously, we've gone higher since the June lows were higher, right? If you draw a line from here to here, it's gone lower. So the divergence playing out from here to here. So the MACD has gone lower and price has gone higher. So if you want to count that, and that's a good way to look at it. So the 3-day time frame, there is divergence. Otherwise, it's pretty natural, boring price action, and nothing to really say about it. Like I said, not much to say. And I'll go back to Bitcoin again. Then another thing that's happened since my last video, you got the CME futures, and we have filled the gap. So there was a gap. Oh, where is it now? A gap right here. This yellow line I've drawn in this chart. This hole here, this big gap, I should say, been filled. Okay, 88k, been filled. This is the first gap was. What was the first gap? It was a bit higher. We filled it here. Sorry, this is the first gap. We filled it. All right, went higher, and then went down to fill the second gap. Okay, so the first gap here and the second gap here. So we filled both gaps now. And we've got a gap just here, right above us, and we just haven't filled it properly. Okay, we've gone down here, but we haven't filled this 89 to really get in this gap fill. So partially filled, but not completely. So I still think we can go higher to fill that gap. And there's no gaps above here. I don't think there's one slightly here, but it's not very noticeable enough for it to really. This gap here, as you can see, but we'll see what happens there. That's not really a gap in my opinion. And there's no real gaps below here to fill. So we're going to see some more chop, and then should see some higher price action, hopefully. No one's not guaranteed, but I'm pretty confident that we should see some movement now. Everything else has been going in the parabolic and nuts. The metal lands, gold and silver going crazy, and the stock market's been going pretty well, but crypto has not been doing well. So what is going on? I don't know. It's probably more sensitive liquidity out there that's not moving like it should. It's probably more to do with global liquidity, and that's what's really affecting Bitcoin's price. I think it's a lot to do with that, and it could do with another theory. Could be Japan. It's bond yields. There's another problem. It's going skyrocketing. It's probably another reason. Probably seeing some weakness in crypto. It's interesting how these markets cross over. The bigger markets affect the smaller markets, and that's what could be potentially happening. We don't know for certainty, but that's just what is going on out there. And a lot of it's manipulation to get the lower prices so they can get orders filled. A lot of different factors, a lot of leverage, wiping out leverage and everything else too. So it's market makers playing games with us until we find some clarity to get the upwards momentum. The next chart I'll look at is the ISM Purchases Managers Index, PMI for the ISM. And now we're below 50. This line is horizontal line. All right, you can see obviously in gold. And once it's above 50, this will see us an expanding economy, not a contracting one. In the US, we've had fake outs. So one here in March 2024, and obviously one here in January 2025. We didn't stay durably above it, and we went back down again. So these fake outs really caused a lot of acceleration, unfortunately, before going lower. So we would have seen a lot of price action going up into these. So if I Bitcoin, and if I logarithmic chart, and you can see this sort of cycle that we're in now, and you can zoom in on it, and you can see we saw a massive rise here in Bitcoin's price, and as ISM was going higher, Bitcoin's going higher, and then we saw some chop as ISM went down, Bitcoin chopped around, and it sort of moved higher, and then the ISM started really shooting higher, and Bitcoin went higher. Had in second, the peak in November 2024, December, and then we had this high here, Bitcoin, the orange, and then PMI went down, Bitcoin went down, and then it went down here. As this went down, they went down here, down. Either Bitcoin had another push higher, which has diverged a little bit from this PMI, slightly, ever so slightly, but it's been going down again. Bitcoin just can't handle it, and it's gone back down to around not far off the March, April lows we made there in 2025. So it's really struggling to get going because this indicator is not showing this momentum. You can see in history, going back here, you can see the highs of Bitcoin to correlate with the highs in the PMI ISM. See there, it's nice and sort of obvious. Even though we went lower, this ISM reading compared to this one, Bitcoin's price went higher, 2021, November, compared to the April top. Well, it was diverging and it went down. So interesting sort of correlations that you're seeing here in the ISM versus Bitcoin. Okay. And to see this massive expansionary above 50, this yellow line, this is when you sort of see durable moves above 50, and it sort of stays there. We do see Bitcoin really explode in price, as you can see there. All right, and again here, boom, explosion in price, Bitcoin and the ISM. Obviously, go back to the previous cycle, 2013 as well. It leads to this area here, explosion. Okay, it's massive parabola when it got above the 50 region. Okay, so above 50, durable, and it stays up there, and you can see Bitcoin price goes in bananas. That's what you want to see for alt season. You want to see this move higher, and it won't happen until this is above 50. Okay, this won't see much momentum for Bitcoin and the rest of the market until this moves above 50. So that'll be something to wait for. You want sort of a durable close above this level. Even though we had 1-2 monthly closes above the 50, we still went lower. I'm looking for another couple monthly closes, and hopefully they are sustainable. So what we hope, because we had, you know, 1, 2 here, two closes monthlies in the 2012 period. We still went lower, still went down, and then we slingshotted above it. That would have sort of freaked people out. And then, you know, because Bitcoin's consolidated here until it went higher and had that confirmation that the PMI was going higher, and then we saw it explode. But you want to say above 50, okay? It's expansionary, not contractionary, and be durable. And yeah, I want to say GDP numbers come in strong for the US. Another thing to look out for. Positive, really good GDP numbers. I should obviously push this up with positive growth. And that should be good, but yeah, you know, it's one of those things you just got to wait for. It's patience, and I have to wait and see what happens, you know, with the rest of the market and what it produces. Because, you know, another thing I also look at is, you know, the stock market's been doing incredibly well. The Russell, you know, it's breaking way above, it's making new highs and smashing way above. That's what you want to see for the fun to happen, but it just hasn't really moved alts just yet, even though it's broken the previous highs in 2021 and 2024. Nasdaq, and obviously looking very strong. Look about to break out the upside, and the S&P, same sort of deal, pretty strong looking. MACD looks like wants to cross bullish, so the indices look pretty bullish. It looks really bullish. 3 time frame, and same as the Russell looks very strong. Yeah, what do? You just got to wait for the ISM, like I showed you this year, for this thing to really tick up, for the alts, the real risky stuff to really catch up compared to what Bitcoin's doing. Bitcoin's struggling too, so it's not the only one. But yeah, we're going to see some more chop until we see some more strong economic data numbers, and that includes the labour market as well, not just the ISM numbers. Services is above 50, but the manufacturing sector is not quite there yet. And it's one of those things that just take a long time to play out, and this is pretty normal for Bitcoin to really consolidate for quite a long time. You had this period here, February to April, so it's 2 months. This is taken from November to now. It's probably 2 months now, so we're due for, you know, either expansion here, or they could really chop around for a long time. Like the 2024 period was nasty, it was brutal. You had this high here, March 2024, and it just consolidated for like basically 3 to 8 months of consolidation. It took expanded to the upside, but this huge move up, and then we top and we consolidate, we go down again. You know, we expand, we consolidate, we go down. Then we go to see consolidation, and then up move is what I see coming next. Hopefully, we'll see what happens. Be optimistic, you know. So that's all we can do. We can hold and pray, and just keep DCAing. Is what I'm doing at the moment. Every 2 weeks or so, I'm DCAing, and I'll just keep doing that for the foreseeable rest of the cycle. So if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you next one. Cheers.